What if I told you that your hard-earned money could be working around the clock to make you richer while you sleep? Sounds too good to be true. Well, buckle up, because today we'll be unlocking the secrets behind making your money work for you, courtesy of none other than financial guru Robert Kiyosaki. These are 5 little-known, yet proven money-multiplying strategies designed to accelerate your income streams and pave the pathway to financial freedom faster than you dared imagine. Intrigued yet? Then let's dive right in. But before we continue, consider subscribing to our channel if you're new here, like this video, and hit the notification bell icon so you do not miss out on any of our wealth-generating content. Number 1. Investing in stocks and mutual funds. Our first stop is the world of investing. Now, what if you could own a slice of a multi-billion-dollar company without needing to run the business yourself? Investing allows everyday people like us to do just that. Let's break this down. When you purchase stocks, called shares, you essentially buy partial ownership in a company. As that company performs well and grows over time, the value of your shares rises too. So even though you're not actively managing operations, your money grows in the background purely through ownership. Mutual funds take this a step further by allowing you to invest in many companies at once. Rather than selecting individual stocks, your money goes into a basket fund made up of dozens or even hundreds of various investments like stocks and bonds. This helps spread risk across multiple assets. But how much can this really grow your money? Well, if you had invested $10,000 in the S&P 500 way back in 1990, by 2020 it would have skyrocketed to over $860,000. That's the power of compound growth over decades of patient investing. Now, the stock market moves up and down daily, so there's always some risk. But with the right mix of stocks and mutual funds tailored to your risk tolerance, time horizon, and financial goals, over long periods you can realize incredible gains. Investing provides an opportunity for financial growth by harnessing the power of compounding over time. Diversification through mutual funds helps mitigate risks associated with individual stocks, as your money is spread across a variety of assets. The remarkable success of the S&P 500 over the years showcases the potential for substantial returns, underlining the significance of long-term commitment to investments. It's crucial to align your investment strategy with your risk tolerance, time horizon, and financial objectives. Regularly reviewing and adjusting your portfolio ensures it stays in line with your evolving needs. While market fluctuations are inevitable, a well-structured and diversified investment portfolio, combined with patience, can weather short-term volatility and yield impressive returns over the long run. Understanding these principles empowers individuals to participate in the growth of major companies and the broader economy, even without actively managing day-to-day operations. Number 2. Real estate investing. Alright, next up is real estate, one of the strongest avenues for building enduring wealth. But forget needing to become a landlord. There are easier routes to tap into this market. First, we have real estate investment trusts, or REITs. These allow you to invest in real estate similarly to stocks, without directly buying physical property. Your money goes towards a diverse portfolio, from commercial buildings to shopping malls, hospitals, apartments, you name it. The trust managers take care of acquisitions and operations, while as an investor you simply receive dividends. Another avenue is house flipping, purchasing rundown properties, renovating them, then selling for a tidy profit. While certainly exciting, this strategy demands deep real estate knowledge and sweat equity to succeed. Perhaps rental properties better match your skills and interests. Robert Kiyosaki frequently emphasizes the power of rental income. By managing your properties wisely over decades, they can provide stable cash flow come rain or shine. Now, while interest rates and regulations fluctuate over time, affecting real estate investing strategies, the core principles remain constant. Choose the right property in a desirable location, understand local market conditions, and effectively manage your assets. Real estate offers diverse avenues for wealth creation beyond traditional property ownership. Real estate investment trusts, REITs, provide a simpler entry point, allowing investors to participate in real estate markets without directly managing physical properties. These trusts offer a range of real estate assets, and investors receive dividends without the hassles of property management. House flipping, though thrilling, demands substantial real estate expertise and effort. Alternatively, rental properties, as emphasized by financial expert Robert Kiyosaki, can provide a steady income stream when managed effectively. Successful real estate investing hinges on selecting the right properties in desirable locations, understanding local market dynamics, and efficient asset management. Despite fluctuations in interest rates and regulations, the enduring principles of real estate investing endure. A strategic approach, grounded in sound market understanding and prudent property management, can lead to enduring wealth through real estate investments. Number 3. Starting a business. All right, let's switch gears and talk about business ownership. Building a company from scratch unlocks massive income potential, allowing you to monetize your talents. And thanks to the internet, launching one is more accessible than ever. The ideal approach is to construct a semi-passive business model designed to run smoothly without needing your constant direct involvement. By leveraging technology, automation, and outsourcing, you can reduce day-to-day management duties. This frees up your schedule to focus on high-level strategy. For example, an online e-commerce store can process transactions around the clock automatically as orders pour in from around the globe. By hiring virtual assistants or freelancers to handle customer service and fulfillment tasks as needed, you're able to oversee operations and continue innovating. Over time, this hands-off income from selling products or services can eclipse your regular 9-to-5 salary. Now, if rolling up your sleeves to build a venture from scratch isn't realistic presently, that's understandable. Consider investing in other emerging businesses instead. By contributing capital, you aid inspiring founders in exchange for an equity stake and upside in their visionary ventures. Building a business from the ground up opens the door to significant income potential, especially in the age of the internet where launching ventures has become more accessible. Creating a semi-passive business model, incorporating technology, automation, and outsourcing, allows for reduced day-to-day involvement, enabling a focus on high-level strategy. Take an online e-commerce store as an example. It can operate automatically, processing transactions globally. By leveraging virtual assistants and freelancers for customer service and fulfillment, the business can run smoothly with minimal direct management. This semi-passive income stream has the potential to surpass traditional employment earnings. For those not ready to start their own venture, investing in emerging businesses offers an alternative. Providing capital to visionary founders in exchange for equity stakes allows you to contribute to innovative ventures without the hands-on effort of entrepreneurship. This approach aligns your financial success with the growth and success of promising new businesses. Number 4. Peer-to-peer lending. Peer-to-peer lending represents a fascinating 21st century twist on generating investment income. You may be familiar with sites like Lending Club and Prosper. These act as direct conduits between individual lenders like you and me to borrowers seeking loans for personal or business financing needs. We all know navigating the maze of traditional big banks for loans can be notoriously difficult, especially for younger borrowers or unconventional projects. Peer-to-peer sites provide increased access to capital, fueling dreams. As lenders, these platforms allow us to browse loan requests and contribute $25 or more towards interesting ventures. You view loan details like intended project use, credit score, income verification, and more to gauge risk. Historical averages around 5 to 7% for safer loans and up to 15% for riskier borrowers. Although always a chance of default, these sites allow lenders to diversify across many notes to mitigate risk. For borrowers, it unlocks opportunities banks often deem too risky, allowing you to directly pitch online investors. The peer trust and goodwill enhance accountability to repay as promised, compared to facing some nameless bankers. Truly a win-win innovation providing easier access to capital across the board. Moreover, peer-to-peer lending platforms facilitate a democratized approach to finance. Investors can diversify their portfolios across multiple loans, mitigating the impact of potential defaults. For borrowers, it offers a more accessible avenue for funding unconventional or high-risk projects, fostering a direct connection with individual investors. This innovative system not only challenges the traditional banking model, but also creates a win-win scenario, fostering trust and enabling greater financial inclusion for both lenders and borrowers alike. Number 5. Education. All right, last but certainly not least, we have the priceless wealth-building asset of continuous learning and skill development. Success guru Jim Rohn famously stated, "Formal education will make you a living, self-education will make you a fortune." How true indeed. In this age of rapid economic transformation, disruptive technologies and industries appear almost overnight. Continual learning and adding new skills ensures we can adapt and capitalize on emerging opportunities. It compounds our knowledge and capabilities over time, becoming a potent catalyst propelling our income and investment portfolio to new heights. Whether through books, online courses, seminars, or good old hands-on practice, make learning a lifelong journey. Apply new knowledge immediately with action to amplify rewards. With an insatiable appetite for growth, over decades you'll uncover paths to financial freedom previously unimaginable. Jim Rohn's wisdom underscores the enduring value of continuous learning in the quest for financial success. The dynamic nature of today's economy demands adaptability, and acquiring new skills positions individuals to seize emerging opportunities. Whether through traditional education, online courses, or hands-on experiences, the commitment to lifelong learning compounds knowledge and capabilities, serving as a powerful catalyst for financial growth. By applying acquired knowledge with action, individuals can unlock pathways to financial freedom that may have seemed unimaginable, establishing a foundation for enduring success over the long term. Well, there you have it. We just uncovered 5 transformational strategies to make your money amplify itself in 2024. From leveraging the wealth snowball of investing, to constructing hands-off semi-passive income streams, and continually expanding your financial knowledge. Now I want to hear from you. Which money-maximizing avenue resonated most powerfully for your unique talents and interests? Let me know in the comments. If you found value in these wealth-accelerating insights, do give this video a like and share it with any friends or family on their own financial freedom journey. And be sure to smash that subscribe button and ring the notification bell so you never miss a money multiplying update, as we have much more coming down the pipeline.